as a Group Chief Executive Officer, Hedge Consulting. As we speak, Hedge Consulting is a multi-asset and multinational hedge fund. By multi-asset, I mean we actually cover our position in multiple asset classes, which includes gold, silver, platinum, palladium, oil, petroleum, natural gas, spreads, base metals, agriculture commodities, foreign exchange, and equities. God willing, we would be adding 2 more asset classes in our kitty. The first would be the Daily Leverage Certificate, DLC, which is traded in Singapore. And second is the Factor Certificates, which are traded in Switzerland. God willing, we would be adding more asset classes in the future course of time. By multinational, I mean we cover our positions at 3 locations, which includes United States, European Union, and Asia Pacific. But please be note that, like I repeated many a times, and I would continue to repeat all the times, that we are a proprietary hedge fund. We are a proprietary hedge fund. By proprietary, I mean to say no third party. I repeat, no third party can invest capital in our funds. No third party. Guys, today, 15th November 2022, I was viewing a website belongs to MENA. MENA means Middle East. And in this, I downloaded, took a print of the paper from Saudi Arabian Stock Exchange. And I would be making a detailed video in that regards. I have some reservations about that, technical reservations, which I would be putting on my YouTube channel. You know that I shot 2 videos on the Emirates NBD bank. And majority of the people knew that I worked as a corporate treasurer in American companies for almost 9.5 years. And you name the bank I not dealt with. You name the bank. And God is very kind. Today, you name a bank we are not dealing with. And you name the mutual fund we are not dealing with. Henceforth, we completely understand the structure of banking. And like on time-to-time basis, I have warned people that the most organized scandal in the world, is mark-to-market accounting. Why mark-to-market accounting? Because 99% people in the world having zero understanding of mark-to-market accounting. Zero understanding of mark-to-market accounting. Rather, I would say that even auditors have zero, even limited understanding of mark-to-market accounting. You would be saying what I'm talking, When I was corporate treasurer for EXL, EY used to be our auditor. Rather, I should say that majority of my tenure of 7 years in EXL, EY used to be the statutory auditor. But as we speak, their statutory auditor is Deloitte. And one thing which I openly said is that the most difficult question in the world is who is more compromised, EY or Deloitte? Because every second day, their names coming up in public domain. Not for good reasons, never be for good reasons that EY invented this product, Deloitte invented this product, Deloitte caught this fraud, Deloitte innovated a new fresh product. Rather, their name came in public for the reasons that they being fined by this regulator, they being fined by this regulator. There is an audit lapse which is going on. The audit failures are going on. The cash is missing from the balance sheet. Example, Wirecard, Germany, and so on and so forth. And it is not that once in blue moon these things are going on. Every second day, every second month, their name came up in public domain. Like, we are shooting this video, and around a week's ago time, Deloitte being fined again by Securities and Exchange Commission. And this time to the tune of around 20 million US dollars. 20 million US dollars. And why? You please check on Google. And Deloitte would be feeling pride. Deloitte would be feeling pride of that. So, in my organization EXL, my ex-employer, the 7 years was, in 7 year, majority of the time is EY. But I left, and then after a couple of years, they changed it to Deloitte. In EY, I dealt with managers. And I know that how hedge accounting is actually done. How hedge accounting is actually planned. What is the understanding level of the auditors in the hedge accounting? Please rest assured, I make a more detailed video in that regards. And if EY is listening to this video, then this is an open challenge to the EY. An open challenge to the EY. In this, the document which I have in my hand, this document is by, Emirates NBD, one of the largest banks we have in UAE, I would say. This document is by Emirates NBD, one of the largest banks we have in UAE. Page number 70 of the document which I downloaded from their annual report, which is on their website. So this is not a confidential information which I downloaded and which no one holds except me. This is on their website. The very important thing which I already highlighted and I'm highlighting again, but in a relatively low manner, is that their derivatives book as of 2021 and which is 31st December, around 816 billion, congratulations, 816 billion AED, remember. And out of this, merely 7.3% is for hedging and rest is derivative held for trading, which means 92.7% of the derivatives, which is 92.7%, which is 757 billion, is for trading. And the beautiful fact is that the whole gain and loss supposed to be passed in P&L. We will have detailed video. Please wait for that. Now, when you take a derivative position, whether this is a freestanding derivative position or whether this is, I would say, whether this is for hedging. For freestanding, whatever gain and loss is coming, it is supposed to go in the P&L straight away. This is the shortest explanation of the freestanding derivative, which means if you are holding a freestanding derivative, and in this case it is 757 billion AED, it will immediately go to the P&L. So you have positive fair values, you have negative fair values. We need to set both fair values, and whatever the final number of coming, it will go in the P&L. And it would impact your EPS in a very defined manner. I'm telling you, in a very, very huge manner, because such a big portfolio, even a basis point swing, which is called PV01, present value of 1 basis point, PV01 would have a huge impact in the EPS. I'll come to that. In this case, having an EPS neutral strategies is almost impossible because your portfolio is having merely 7% as hedging while 92% as trading. Soon we would be covering the movement of EPS of the last 5 years on annual basis. Please be rest assured. But whatever they have for hedging purpose, there is a thing called hedge effectiveness testing. Hedge effectiveness testing is nothing but a testing which you would be doing to make sure that whatever exposures you have, you are considering these exposures as the base of your hedging. Which means if your exposure is $100, assuming your hedging should not be more than $100. Because if it is more than $100, then it is considered as an ineffective hedges. As simple as that. And whatever portion of ineffective hedges, it would immediately go to the P&L. And there is no reclassification adjustment which is possible in that regards. I repeat, there is no reclassification adjustment which is possible in that regards. But IFRS allows you to do hedge accounting either qualitatively or quantitatively. But the basic difference, which is unsaid, between IFRS and US GAAP is that US GAAP inclined towards the qualitative part while IFRS is inclined towards quantitative part. This is an inclination. Now, when I say quantitative, I mean to say the dollar offset method, the most complicated regression method. When I say qualitative, I mean to say criticals to term method, which is often used, called CTM method, criticals to term method, shortcut method. Although we have variety of methods, because in interest rate swaps we have simulation methods, we have more complicated methods, but eventually we take these methods into consideration. Eventually we can say we take these methods into consideration. Now I am reading the hedge effectiveness testing definition by Emirates NBD, and you would be surprised to know in 2020, the auditors were Deloitte, and 2021 auditors are Deloitte. 2022 yet to come. Probably next year we will have annual report, so we have zero understanding who is actually the auditor as we speak. Hedge effectiveness is measured by group on a prospective basis at inception, as well as retrospective where applicable. Guys, retrospective hedge effectiveness testing is gone years ago. But Emirates is mentioning retrospective. Anyways, let's continue. Hedge effectiveness is measured by group on a prospective basis at inception, as well as retrospective where applicable, and prospectively over the term of the hedge relationship. Sources of ineffectiveness in hedge accounting include the impact of derivative-related credit risk on valuation of the hedging derivative and hedged item. To mitigate the credit risk, group executes hedging derivatives with high-quality counterparties, and majority of the group's derivative hedging are characterized. This is the definition of hedge effectiveness testing put up by Emirates NBD. Except three people, Einstein, Edison, and Newton. We need Steve Jobs also, who can defend this definition. Because I cannot defend this definition because credit risk is called CVA. Credit Valuation Adjustment. And CVA is an inbuilt part of your price, which you are taking. Actually, it is net CVA, which is DVA minus CVA, which is an inbuilt part of your price, which you are taking. And I hereby challenge the corporate treasurer of Emirates NBD, if he can prove me that CVA is not inbuilt in the price. Rather, you need to take a specific credit hedging for credit hedging to cover under hedge effectiveness program. If you are doing cash flow hedge, if you are doing fair value hedge, or if you are doing net investment hedging, and you are not disclosing the method of the hedge effectiveness testing, then this is a serious concern as far as myself is concerned. Probably for the many people in the world, it might not be of any concern like we are aware about, More importantly, I already covered that the issues in the fair value hedging in my earlier video, which is already live on YouTube. So I won't be covering this. But very important thing which I would like to cover is the definition called derivative held or issued for trading purpose. Now the definition is most of the group derivative trading activities relate to sales and positional coverage. Sales activities involve offering products to customers at a competitive prices in order to enable them to transfer, modify or reduce current and expected cost. Interest rate derivatives, which is also known as IR derivatives, is conducted under board approved limit. I'm very surprised that a big bank like Emirates NBD is having serious issues in their disclosures. Rather, you would be very surprised to know that I downloaded the selective pages of the annual report of many UAE banks. You would be surprised to know. And in majority, I would say, in majority of the UAE banks, the scene is same. Rather, in one of the GCC banks, not UAE bank, the scene is more worse than I have in my hand. Guys, before I continue, I would like to tell you one thing. These disclosures are not adequate disclosures. We cannot term these disclosures as adequate because there are flaws and there are gaps in these disclosures. Example, if I'm reading this, I never get to know whether the hedging, the effectiveness testing is done as per quantitative methods or as per qualitative methods. I have no information of that. And since I have no information of that, I cannot comment on the MTM which is coming. Example, I have the evidence of that. The total derivative book, which includes trading book plus the hedging book, is equals to 817 billion AED. 817 billion AED. And you would be surprised to know that the total fair value of all is plus 1 billion. Plus 1 billion. Although it is not plus 1 billion, still you consider say 1.5 billion. Okay, in a very approximate manner, 1.5 billion. Guys, 817 billion is your size. 817 billion is your size of your derivatives book, which you are claiming here. Okay. And the MTM, the net MTM, you are saying is only 1.5 billion. I leave the job on you. Compute 1.5 as a part of 817 billion. It is not even 1%. It is not even 1%. And I'm talking about when the world is facing huge volatility. Japanese yen, which touched 150, full panic in the market, and now 139. 11 big figures down. 11 big figures down. Do you know how to compute the MTM when your product is 11 big figure down in just less than a month? GBP 1.13 and now 1.17. Euro 0.96, now almost 1.02. Swiss franc, Canadian dollar, Singapore dollar, Australian dollar. My own position in the Australian dollar was in loss. I waited. I was 5 big figure down. I was 5 big figure down, guys. I waited because I was hopeful. My analysis suggested me that it would go up. I waited, and finally I got the price which I'm looking forward. I closed in profits. I was 5 big figure down. And if I look at the statistics provided by Emirates NBD, they are trying to prove that the hedge book of 817 billion, the net fair value is 1.5 billion plus, which is not even 1%. Not even 1%. With this, although I have more to cover, I would be covering with the passage of time. I cannot cover everything in one video. I would like to throw a challenge to Emirates NBD, the so-called corporate treasurer of Emirates NBD, the so-called treasury head of Emirates NBD, the regulator of Dubai, DFSA. If they are able to prove that this is correct, I am in the game. Guys, I told you many times. Goldman Sachs, JP Morgan, Standard Chartered, UBS, Barclays, Deutsche, Credit Suisse, Wells Fargo, Morgan Stanley, and the list is long. There is hardly any fraud they left with. Specifically talking JP Morgan, Credit Suisse, and Citibank. There is hardly any fraud they left with. So, only because there is a big name we have, and whatever they are disclosing in their annual report, that suffice is not something which we can digest. We have to appreciate that in 2022, you name the bank and there is a scandal attached to that bank. You name the bank and there is a scandal attached to that bank. Disclosure is a big issue as far as the hedge accounting norms are concerned. Because majority of the valuation is derived from disclosures. Majority of the valuations. And if your disclosures, like I have, do not complete, do not specify what you are looking forward, in this eventuality, everything is in the air. Everything is in the air because you yourself is not sure what are you writing. Emirates NBD should not treat this as the last video because treasury consulting is now in the MENA market. MENA means Middle East. And we would be covering all financial institutions, including sovereign wealth fund of MENA market. Including sovereign wealth fund of MENA market, example Dubai Wealth Fund, Saudi Investment Corporation, and ADI, Abu Dhabi Investment Corporations and all. This is Rahul Magan from Treasury Consulting Group. You knew my personal number +91 9899 242 978. I repeat +91 9899 242 978. If you wish to have more information, you can visit our trainings. You want to have more consulting and all, you can visit our fixed income platform www.fixedincome.global. www.fixedincome.global. Thank you guys. Have a great time ahead. Thank you.